So let's talk about the silver market then. Over the last year, again, significant run up in the silver price, gold as well, although both metals have tapered off a little bit since its highs. What was your reaction initially when you saw the price run up to, or for gold, at least for gold, to historic levels? Did it change your production plans at all? Did you reallocate resources to capture higher silver and gold prices? What did you do?
Well, first off, I said to myself, it's about time. It's been, we went through a pretty difficult period, from 2012 to 2017 and 2016. And then we had a, bit of a pause in 2017, 2018, and things resumed again in 2019. So, being an investor in this space has not exactly been easy over the last, 5, 6, 7 years. And as an executive team, it's just as challenging, because we put budgets together at certain metal prices, and we anticipate, getting those revenues into the door so we can make the necessary investments to expand the business. And when the metal prices don't perform, then we have to cut back our investments, and that often includes, layoffs, or it could include canceling or postponing projects, and all these kinds of things. A start and stop type of activity that the miners are forced into sometimes do add to costs, because it's expensive to do that. So we have to try to remain conservative as best as possible in order not to, go crazy on the CapEx side just because we see higher metal prices. Because even though, despite the fact that I think, we're going to see triple-digit silver, we are running a, large publicly traded company, and it is our shareholders' money. So, we have to be somewhat conservative when we're deploying capital. But, we are expanding Santa Elena right now with the Ermitaño project coming online. There's investment going into exploration at San Dimas, and so we're very focused on resource development, life of mine expansion, and now with Jerritt Canyon coming into the picture, same kind of strategy is going to be employed there.
And just quickly now on your strategy, M&A, you talked about not deploying too much capital on the CapEx front when prices run up. What about M&A? Does that do you have the same? Do you have to maintain the same discipline when you've got more cash flow coming in and it's just tempting to buy up a company? How do you
well,
interpret that?
First off, we're all humans, and when price rises, greed rises. So it takes two to tango. It takes two groups to say yes to a transaction, and often when prices are running, as we've seen that they've done over the last couple of years, the sellers tend to shy away a little bit, and it's more challenging for the buyers to do deals. So M&A transactions do definitely slow down. The other hindrance to M&A, as I've said this before, is the lack of conferences. Mining conferences whereby the executives of all these mining companies are have a chance to see each other face to face and actually talk about deals and what things look like in the future, and that really helps or has helped historically M&A transactions. And without those conferences, I think that's also had a negative impact on M&A activity.
Let's talk about your triple-digit silver call. Now, you've been on the show in the past before talking about this longer-term outlook, and let's break down the fundamentals here and talk to us about how the market could get there. Let's start with the industrial component, and before we move on to the investment demand component. Silver is in a unique position where you've got both components to consider. So what are some of the industrial applications today that you're looking out for that could potentially drive up demand?
Well, everyone that's listening to this podcast or this interview knows, my spiel and my bullish comments regarding the metal. I look at silver as a strategic metal, not so much as a precious metal, despite the fact it is precious. Going to the precious story for a second. In 2020, for every 1 ounce of gold mined worldwide, there was only 7 ounces of silver mined, which is a pretty shocking number considering we're trading at something in the order of 70 to 1 in the financial markets. So that's just that. Now, on the pure demand side, when it comes to whether it's the Green Deal or whether it's just the electrification of the planet or what have you, you look at copper prices, you look at commodities. Silver is really the only commodity that's not really reaching its highs that it has reached now on two separate occasions back in 1980 and in 2011. I think we're going to see that high breached in this cycle. And when it does, it's going to wake up the market. And that's what I think. Once it breaks through the $50 level, I think that it's going to get up to the $100 level pretty quickly. It might bounce around 70 or 80. Who knows? But I think those are the kinds of numbers. Copper broke through $10,000 a pound yesterday, and oil's on its way back to $100 a barrel, and we're getting into a pretty inflationary time. And also, you add the actual supply deficits on top of that with silver, you've got a perfect storm, just in the making, in my opinion.
Okay, so let's talk about that in just a bit. The strategic metal aspect that you brought up, that's a good point. Are you not concerned that should silver one day breach $100 an ounce in the triple digits, maybe there's going to be thrifting in the industry? People are going to use less silver? Would that be a problem?
Well, if you go to our website, you'll see there's no substitute for silver. Now, if you go back 20 years and look at solar panels, today there's less silver being used in solar panels due to efficiencies in the technology. So the companies, DuPont's, who produce this material for the solar panels, have been able to reduce the amount of silver used and also, at the same time, have the same power density. There's a limit to that, and it's likely reached now. So whether the solar panel industry can actually reduce silver even further, there's a lot of doubt around that. You could go to a very cheap solar panel, but the efficiencies are going to drop below 25%, and then the silver panel itself is almost uneconomic. So why even bother buying it in the first place? Other technologies like electric cars, that's not going backwards. I think everyone listening to this would agree that the future is electric, and then probably after that, fuel cells. But that's probably 50 years on the road. But the next big move is going to be electric cars, and that's going to be a huge consumers of silver.
So let's assume that let's go with your the data that you've observed and say that there is indeed a deficit in the physical market, and that the numbers that they've reported can be disputed. What does this deficit mean for the price of silver going into potentially the next year?
Well, look, the guy that runs the CFTC just recently in an interview said they were successfully able to cap the market when it ran up to $30 an ounce. Pretty shocking statement from somebody who runs the exchange. Nevertheless, so there is definitely efforts to keep these markets kind of at bay. Whether it's the silver or gold market, and I'm a big believer in physical demand will ultimately break the strangleholds on these paper markets, and that's what I advocate people do, and I suggest people continue to do that.
Can you just clarify what you mean by break the strangleholds? What exactly is that referring to, Keith?
Well, these silver prices, that's what we're talking about today, have been caught in this trading range for some 30 years. When I say trading range, I mean trading ratio, and you get used to that, and the banks get used to that, and when it gets at the top end of that range, they may decide to take on a bigger position. When it gets on the lower side of that range, maybe they do some other trading. I don't work in the banks anymore, but I kind of know how things work. But when you're Sony or Tesla or Apple, and then you just given one of the banks a big order for silver, and you need it delivered to various ports around the world for you to be able to manufacture your products, and all of a sudden one of the banks can't deliver to you. Because of the physical metal's just simply not there. That's where I think we're headed. And I think it's going to be the retail investor who's going to cause the biggest issue for that event to occur, because we do have a new buyer in the market that wasn't there a couple of years ago. Since I put First Majestic together 19 years ago, there's been pretty much the same buyer in this market, and the banks are pretty familiar with the commercial demand. They obviously monitor that pretty closely. What they don't monitor and can't control is their retail demand. And that's my point. I think it's going to be the retail demand. And we saw glimpses of that in the Reddit, crowd that occurred, recently. And I think that momentum is going to continue. Our sales of our website just don't stop. We cannot get enough metal into our warehouse to fill the demand. We could probably sell at least 5 times our current volume. And that's a bit of a guess on my part, but if we had the metal in inventory today.